Traders, welcome back to another price action training lesson. We're looking at S&P 500 mini futures, and today started with very high volatility, large amount of bars. There's so much price action on the chart. We have a downtrend working lower. There's a massive trend down created by the news. Then we entered a consolidating area, neutral bias. It was a bit difficult to navigate the structure right after market opened simply because candles were printing very fast and trends kept reversing almost instantly, so market is whipsawing up and down. Finally, we have some nice downtrend working lower with the break, lower high to test the new extreme, and the bottom is completely dropping lower. So this right here is indicating first signs of possible strong downtrend, so I'm definitely not even thinking about buying, and the trend down continues. If I'm going to zoom out, I can see that every single major high and low is lower and lower. So there is definitely bearish structure right now present in this market. And as a price action trader, I always want to know where the market is heading and where's the key entry point. So I'm looking for the right channel. So what I did, I tried to initially look for a wider channel like this, connecting the swings at the top, copying it, putting it at the bottom. Important thing is to realize the market is in the bearish trend down. I'm not thinking about buying. I want to use price action rules in my favor, and I want to sell either at the EMA, 21 bar EMA, or the main key entry point. So prices kept continuing working lower, but shortly after, even the trend channel line was broken. And because the channel is a little bit too broad, we don't have any price action right here at the top part of the channel. This channel doesn't fit that well. So what I did, I liked looking for a little bit steeper channel, something like this, first two swings, because this is where the area where the bottom dropped, where the downtrend started. So let me see how this fits. This fits pretty well. So right now what I'm going to do, I'm going to respect the correction. I'm going to redraw the short-term uptrend working higher. And I'm going to use price action counting technique. I need to sell the second entry short at the key entry point. We have a first attempt to sell, break, new high, and you can see we are getting the confirmation of the channel. But I don't know if there's price action going to be trending to the upside. So in order for me to trust it, I want to see what? Break below EMA. That's the confirmation that the bearish momentum is resuming. And I want to see a lower high or fell second entry long. One leg up, break, second leg up. So what I can see is that the uptrend, the correction played out. Third swing confirmation of the key entry point. This is a good sign. So can I get a lower high? One tick higher, no first entry long, no lower high. By the time I get a lower high, it is so far down. So this is not a good opportunity for me to sell far from the EMA at the bottom of the move. And now we have a failed second entry long. Normally, this failed second entry long is not ideal because it already pushed quite down after the move happened. But because this trend down was very strong, this is decent failed second entry long to consider. I tried to take it, but there was a gap. The bar is big, so definitely use limit order. It never came back, and market continues to go lower. Quick little scalp. I'm going to redraw the short-term uptrend, and you can see we're very close to these lows, and the market is starting to go sideways. EMA is flattening. Now we have another second entry short, but we are very close to these lows. We want to sell at the top of the move when the correction phase will end. You can see how the bottom already dropped here. There's empty room inside of this channel, and it's starting to look quite stacked. It still looks for a small scalp for 8 ticks, but you don't want to take it. And now we have a lower high. Problem is, look at the lower high. This is what we call a wedged setup. Because we're so close to these lows, there is no room to scalp out, and it's getting stacked, EMA flattened, and the lower you sell, the higher the risk you're going to get trapped. So the empty room here is indicating the market is about to roll over. We're close to these lows, and it is way too wedged. So I can see that the market is correcting, and now that I see this, what I'm going to do, I'm going to look for these key levels. I wouldn't have these key levels on a chart at this point right here, but now that I can see prices breaking the channel and EMA is flattening, move up, move down, move up, there has to be some consolidation. Because remember, we traded down into this downtrend, so there is a bearish bias and we need to get new extreme. So you always are more interested in selling the high, so according to range rules, buy low, sell high, because you traded down into this, and buy the low if you trade up into that. So we traded down. So right now, I just want to see a resistance holding, and I want to see failed second entry long below EMA. I can't really take a lower high here. Why? Well, because there's empty room, we didn't fully confirm the resistance. How do I know if there is some bigger channel? I simply don't know. For this reason, I want to see if it's like an inch long. It's still a pro scalp, but that's not great. Okay, market is finally confirming the resistance. New high, first entry long. Failed. Can get a second entry long. Yes, we can. Second entry long. Failure. I'm going to redraw the downtrend working low. So this right here is a failed second entry long. We're coming off to range highs. We broke below EMA. All the buyers are going to get trapped because the main bias is to the downside. And this is a great bullish trap and a great failed second entry long using the price action rules, using the counting technique, and understanding what is the bias and where the market is going to go. Which market is going to go to the downside. Because prices keep working lower, there is still opportunity for me to capitalize on the move down. Okay, the move is not over. We need to get new lows. I want to see second entry short at the EMA. This is nice, proven downtrend with the direction of the main trend, but we already pushed down and we have small break and new low for all downtrends. So two downtrends played out, break. So right now I have a break and a new extreme for this main downtrend, the short-term one, so I expect correction or reversal. But when the market was this bearish, of course I cannot prematurely buy the bottom. The stronger the trend down is, or to the upside for the matter, you want to see proven trend in the opposite direction. The weaker it is, the more you can be buying the bottom or taking instantly reversal pattern. So right now what I'm going to do, I'm going to be more laid back. I want to see price action unfold its cards. I want to see intentions of all the market participants, what they're going to do. Because I don't want to get trapped selling after downtrends played up. At the same time, I don't want to go long prematurely. Market keeps working hard, so I'm going to draw uptrend working hard. Initially, I had my channel a little bit wider. You can see how nice it fits. I was expecting to test the new high, but once prices broke below EMA like this, it's pretty obvious that the resistance held and there has to be some stronger downtrend working lower. There probably ended up being a small break and new high. It's very hard to know this on this chart. If you have slightly different candles, which can happen using tick charts, you can have a clear break, new high. In that case, you can consider taking this for second entry long. However, if you have identical bars as I had today, it's very hard to take it because by the time I get a failed second entry long, the wider uptrend still looks in place. So only if you have slightly better chart, slightly different bars, because the resistance held strongly, we're breaking below EMA. So now can I get a second entry short that the downtrend is proven? I'm going to move this a little bit lower because the trend range has expanded, but there is no second entry short on the way down. Once again, just prices broke lower. Let me redraw the downtrend. Okay, downtrend is working lower. You have a new low, first entry short, second entry short. I cannot take second entry short. So far from the EMA, so far from the key entry point. And now we have new high, first entry long, failure, second entry long, failure. And this right here is a failed second entry long. Downtrend is a good new extreme. It is a little bit at the bottom of the move, so it is a little bit more aggressive. But this trend down should get new extreme. It may keep rejecting once, twice, decent entry. Breaking new extreme for this channel. So we're just going to use price action rules. And now you can see EMA flattening. We redraw the uptrend working higher. Okay, I was expecting new high for this uptrend, never got tested. And there is no setup, no bias dissipated. There is no downtrend in play. If I'm going to zoom back, you can see this is going sideways, slight bearish bias. So I have to be careful looking to get short, but at the same time, I cannot go long prematurely. So once again, another no trade zone, area of development. It's important as a trader to be fully objective and to understand that there are areas on the chart where you simply have to wait and let other market participants to tell you and show you what are their intentions. And right now, the bias is very neutral. This is where you're going to make most of your mistakes. So don't even look for setups. Be patient. Wait for some established channels or established trend range. This is about to be some established trend range, but we have some higher lows. Market is suddenly working to the upside. There is no lower higher for second entry long below EMA. And because this trend up is right now gaining momentum, I'm going to draw wide uptrend, something like this. This right here is the second swing. If I'm going to draw it from the very first swing, connect the two, it feels a little bit too wide at this point. Normally we start from the very first swing. It can be valid, of course, but it's a bit better to focus on the recent structure. This channel fits a little bit better. For this reason, I'm using the little bit steeper one because candles fit much better. Channel is confirmed, so I want to see second entry long at the EMA. New high, first entry long, second entry long, ideally at the EMA, because now the channel has been established and I can trust taking a setup right now under this structure because it is more clear. No second entry long at the EMA. Break, new extreme played out. Okay, but if I'm going to take a look at the structure, this was a massive push to new extreme, and even inside of a trend range, we are paying attention to the strength of the trend. From the very beginning of the uptrend, we never broke below EMA. There is massive bullish bias. EMA keeps holding every single time. And yesterday we had similar scenario. You can see we have a new high, first entry long. Why only first entry long at the exponential moving average while the downtrend is in play generated such a significant push phase? This is a tip that we can use. Once you can see only first entry generating such a significant push, there is a chance there is some bigger key entry point, because only first entry long is not supposed to create such a significant push, and the uptrend still looks intact. Series of high highs and high lows. If you're going to combine with the EMA rejection, it makes sense to draw the wider channel. So I decided to draw a channel like this. Notice how many confirmations I have. I have to cut a little bit early, but it fits perfectly. It fits off of these highs. However, I have overshoot. Okay, so we widen the channel because we're working with the EMA. We can understand the bias, the strength of the trend, the nature of the market. But I have overshoot, so I need to respect the stronger pullback. So I'm going to wait my turn. I'm going to redraw the downtrend. If there's going to be a second entry long at the EMA, I cannot take it. After overshoot, we can have break or possible reversal. So let's be patient. Now prices are going higher. Can we go long here? New low, first entry short, second entry short failure. We cannot go long here. Number one, it is a little bit far from the EMA with the body, but it's not that big of a deal. The most importantly, this downtrend is after overshoot and it needs to get the second leg down. And we talked about this, I believe, on Monday. When you have overshoot, there tends to be trap. They make it tempting like this off the channel, and they're gonna drop it lower. I remember we talked about it. We had two overshoots that day. So this is the same scenario. We first want to see channel having a break in your extreme, and you prefer this main channel, the uptrend, to get a break, to truly know that the momentum for the stronger bearish pullback is alleviated. So break. Okay, no good setup. Now I can move the resistance a little bit higher because I have one swing, second bounce, third bounce. Okay, finally the downtrend played out with one leg to new low, second leg to a new extreme. So downtrend played out with the break and new low. And because we have triple test, key level keeps holding, and the uptrend according to channel rule need to get new high. This is a great signal bar. It's a great high probability setup. Triple test off the key level, uptrend is new high, and the downtrend after overshoot finally played out. Triple test, high probability setup. Can we get a hollow confirmation setup? We still need to get new high, confirming triple test. Yes, we have a hollow here, but I can't enter there because I cannot go long above bearish bar. And by the time you have a double bar entry, you basically almost create a new high. So I can't go long here. Break, new extreme. So we played out the uptrend. So right now I'm gonna see what the price action will do. Okay, can I go short? Can I go long? Prices keep working to the upside, which is quite interesting. Market keeps working lower. I'm gonna redraw the downtrend. Something like this. If we're gonna break this scale and we're gonna go all the way down here, then the structure is gonna be bearish. If this scale was gonna hold and we're gonna push above EMA, what does that mean? It means that the support is holding, EMA is flattening, we're swinging up and up and up and down, so there's a chance we may have some brand new trend range established at the top part of the main one. Small break, new extreme. Prices are breaking above EMA. I cannot take just high low. New low, first entry short, pullback, second entry short failure. So this right here is pretty tempting. Felt second entry short, and it's not a bad setup because downtrend play with the breaking low. Support is holding. Push above EMA is indicating bullish momentum. But this uptrend, the micro one, has a breaking new high. Now, we can easily draw a wider channel because the support held. So our next target is most likely this resistance. But you're buying at the top of the move. You generally prefer to buy a little bit lower. So you have some room to make sure to be a little bit safe. It is not a horrible setup. You can risk it. It is quite big, signal bar 5 points. So we need to use limit order. Unfortunately, no fill. Market keeps working higher, so we're going to draw the wide uptrend working higher like this. Overshoot. Okay. No good entry. There's a tool like a pullback. This uptrend is new high. But it was a little bit too big. Once again, you need to use double bar entry. Break. New extreme. Let's see what's going to happen. No bias now because uptrends played out. And I cannot really sell just yet. Okay, market is finally trending lower. Redraw the downtrend. This is significant push down, so I'm going to widen it because the second leg down is much longer than the first one. I'm going to zoom out. I'm going to grab my new high. So as you can see, neutral bias for the most part. We're trying to locate the channel every single time. This was very nice, strong uptrend, break new high. Once it played out, you have to follow the short-term channels. Now this downtrend is in play and it keeps breaking this support, so it looks like we may go back to the downside. The downtrend is taking precedence. New low, first entry short. So we expect new low for the downtrend, so I want to see second entry short at the EMA. I have a second entry short here, but the signal bar once again, terrible. I cannot sell below bull bar. Double bar entry, stop loss has to go here, so it is quite big. Great setup context wise. EMA keeps holding. Downtrend is new low, but on my chart simply cannot be entered. And lower high is enough with the EMA too far down. Break in new extreme. Downtrend played out. EMA flat, congestion, so no trade zone. You can see stacked area. No trade zone for me. Trend working higher. Okay, market keeps trending lower, so I'm going to redraw the downtrend working lower break. New low, but prices keep trending lower. If I'm going to take a look at the beginning of the downtrend, there are lower highs, so I can use the market geometry in my favor and try to locate some possible downtrend. Okay, the downtrend is getting confirmed, which is good. You can see how nice the trend channel line is holding. So this downtrend is getting confirmed. Gonna redraw the uptrend working higher. Second entry short again. Uptrend played out with the break in new high. This should be okay setup, but this is an inside bar. So can you get lower high below EMA? It was also above EMA. No lower high. Micro double bottom. Going to redraw the uptrend. Can the trend line still show signs of selling pressure? Yes. New low. First entry short. Pull back. Second entry short. And this right here is a great second entry short. Off the trend line. New high. New low. Market keeps working lower. The downtrend is still in place, so we have two key entry points, great signal bar, EMA and the trend line, great second entry short. Downtrend needs to get new extreme. New low tested, and now the market can reverse. So because market is reversing, I'm going to redraw a brand new uptrend. And every single time I see such a nice, strong, confirmed trend, this is the structure that I'm very pleased to see, because a lot of times you get a textbook second entry long, there are no conflicting variables, we need to get new high, but in this case you can see we broke below EMA, so this is not good. So I cannot go long below EMA, I need to see push above EMA and a hollow or flat second entry short. I cannot go long above horrible bearish bar. There's no trade here. Can we get a flat second entry short above EMA? And we can see right now that EMA flat, we have pretty much no trade zone. Uptrend still needs to get new high, but there's simply no way for me to enter this horrible signal bar, so you pretty much can't really enter. And now market has a break, new extreme, and downtrend is reversing and market is about to close. Yesterday we had a very strong downtrend, which was absolutely a phenomenal day, and it's very typical after a strong trend to the upside or to the downside, the second day to be quite neutral, mainly consolidation, So this is pretty much what happened. There was some nice downtrend, nice uptrend, but overall, you're mainly going sideways. You have to navigate short-term channels, and you have to pay attention to the EMA. Every single time it gets flat and it gets in one of these bars, this is a congestion. This is pretty much no trade zone, and you preferably have to wait for some nice clean improvement trend and capitalize on that. So I hope you had a great trading day. I'm going to wrap it up. I'm going to talk to you next time. Good luck your trading.